What's up, ladies and gentlemen? Welcome. I am the Crypto Crow. It is Thursday, January 9th, 2025. This is not going to be a long video, but I wanted to cover some things going on that obviously some people are getting concerned about. And I thought, it's time to do a video. So we're looking at Bitcoin right now. This is actually a weekly chart right now. This is a weekly candle. And you can see here, we've basically just touched, we've just touched this, this line that has basically been, typically unbroken once we enter it until we've hit some form of peak. It's pretty much been the case in all situations. Now, we know that the markets are basically entering a lot of new territory. The Bitcoin ETFs and the institutions and the BlackRocks and the hoo-has and everybody getting involved in Bitcoin now. So the narrative is much more powerful, right? We know that these whales, a lot of people have been accumulating, and there's a lot happening in the world. There's a transition politically on a global level in Canada and the US, and we're basically going from left to right. And I always say everything is like a pendulum. It swings back and forth, and a lot of people cheering on all of this stuff over the last 4 years as people were censored and shut down, and it just seemed like they were controlling the world. And I always said, listen, the things that you root for today that are in your favor are going to come back to bite you in the end, because this always goes back and forth. And I do believe a lot of it is by design. But, to each their own. And, now we're entering a new era, right? A pro-crypto era with a pro-crypto administration. Basically, we're on the 9th. We've got less than 2 weeks away. And so that's basically what we're seeing is potentially some uncertainty, right? And we're seeing the way the institutional markets kind of break things up, taper things down. They kind of tighten in on the volatility of Bitcoin. One of the things that makes Bitcoin so amazing for so many people is its insane volatility. But that's being tamed a bit, and has been really since 2017. I mean, it's just, we had that 2017 peak. That was when the CME futures market first opened. And since then, it's just been, being tamed more and more every cycle. So, but I don't necessarily think that we're going to close below this. We could potentially wick below over the next week, but I don't see that happening. And, as you can see here, this is Bitcoin on a 4-hour chart. We got all of our indicators, strong diving crow. We got all of these indicators basically saying, hey, this is going to go down much further. And of course it has. But it also bounced off of support at around 91,800. This is a key level of support for Bitcoin right now, and we've basically bounced off of it. And we'll see what happens, because we also then bounced off and got rejected off of this moving average. So we'll see how it plays out. But effectively, I don't think the sky is falling. Okay, I really don't. We basically, I think we hit our bottom. I could be wrong, right? And this is the thing that I have to really say. Don't trade on what I say, okay? I had a friend of mine, a personal friend. He could have just texted me, and he could have just said, hey, can you explain this a little better? But he didn't do that. He saw my video where I said Cardano could get down to as low as 76 cents. And, but then it's likely going to bounce up. Well, it didn't go to 76 cents. It was in something like the 90-cent range, and he decided to sell, hoping he'd be able to buy back in at the top. But I don't know what exact price point he sold at, but when he bought back in, because he basically panic sold, he didn't know what to do. He thought he was going to make a play and buy Cardano back lower. It didn't go that low, and he ended up losing like a couple thousand ADA worth of his position because he had to buy back higher to be in the market. And I always tell people, listen, I don't tell you these things because I want you to trade on them. I tell you these things so that you can expect what may happen. Not that I think they are going to happen, or that it could happen, or that it will happen, or any of that. Just based off the charts alone and what's going on, some of these situations could potentially play out. I don't trade them. I just basically say what is potential, so that if it does happen, You don't think the sky is falling, the market is over, it's all done. That's all I'm doing. I'm putting things in your head so that you understand that if it happens, it's not the end of the world. You don't have to freak out and panic sell. That's what the point of these videos are. I'm not giving financial advice. You do whatever you want to do. I'm just sharing my opinions based off of what I think and what I see, and I'm always right sometimes. That's it. So that being said, it looks like we could potentially have our bottom here because there's a lot of green liquidity here. Now, looking at Cardano, obviously, when Bitcoin crashes, the market crashes. Typically, Cardano does as well. Even though there was a lot of whale buying around $1 that was keeping this at bay for a minute, we basically came lower and lower. Now we're at a point where we're bouncing off a level of support and around the 88-cent mark, and we've bounced off of that. We've came back up to around 92, 93 cents. I think this is where we range. It's my guess, but I'm going to assume that this is likely where we range. Typically, on Wednesday, we start getting a turnaround in the market, which it looks like we got. Wednesday, Thursday, Friday, we continue in that uptrend. We may very well range through the weekend. Hopefully, we start getting some additional pumps into Monday as we get closer to the inauguration. But again, I don't know. I'm just sharing what my opinions are. If we look at the liquidation charts, this is Binance BTC USDT liquidation heat map. You can see there's really not that much. I mean, there is, but there's not, right? In the grand scheme of things. Up here, you've got, $121 million just ready to be liquidated. You've got hundreds of millions of dollars up here, and you've got about half of that down here. So there isn't as much incentive unless here's what happens, okay? Just so that you understand. The market makers, I believe that there's a variable of algorithmic trading going on across the board, right? So that to some extent helps kind of keep the market going. Then you have the market makers that are basically trying to liquidate as many people as they can. That's the game. When you're leverage trading, you're basically trying to profit off of an asset you own by borrowing against the machine, if you will, to trade more and then benefit from those swings. But if you lose in that trade, then you lose some of your position, you lose some of your asset. These market makers are hired specifically to it depends on who's hiring them and who they work for. If they're hired by the exchanges, well, the exchanges want to basically liquidate you. They want to keep all that money that you're putting on those exchanges. They do pretty well from that, as well as the trading fees. Now, you could have maybe you have an altcoin asset launch that you've launched and you hire a market maker because you want the price to remain somewhere within a particular window so that there's liquidity that builds up there, and then you have funds that you can basically operate from. That's how I know a lot of these projects work. They hire market makers to move the market and to make sure that, hey, we need to make sure that, we released our token at this price point. We need to make sure that degenerates that got in very early aren't dumping on the heads of people. We need to keep that price leveraged out. Like we need a certain window. But outside of that, when people are longing and shorting, it creates this liquidity. It creates these opportunities for the market makers that if they can, based on sentiment, based on retail, based on algorithmic trading, based on all these different things, they can pretty much see, okay, we need this much money to move the market into this direction. We need that much capital to move the market in that direction. And they play these markets as in very systematic formulas based off of capital available. Now, if you are somebody like a BlackRock or a major institution, you have market makers in the market, I'm going to assume. They have, BlackRock has like Aladdin, and they can basically gauge the sentiment overall, and they can manipulate that sentiment with articles. He can, Larry Fink can go on any news network he wants to. A lot of these guys have a lot of power to create sentiment in the market to do what they're trying to achieve. If for whatever reason their books say we need the price to get to around this point so that we can onboard a lot of these newcomers that are basically looking and getting in, but the sentiment is, based on recent polling, they're more comfortable buying it at 90,000 than they are at 95,000. Well, then maybe we need to get the market maker to get to work, right? I'm making up all of this. I don't know how exactly it works, but I'm trying to put a vision in your head that this isn't just, well, the market's moving, right? There are so many different factors that play into this. And so these heat maps are a way to gauge where people's sentiment is, where people think the price is going to go. And at this point, there's a lot more liquidity sitting up here for the people that shorted, because people were shorting like around the bottom here, right? Thinking it's going to continue going lower. Well, that creates liquidity up here that tells the market maker, okay, everybody that's been watching this trend they think the price is going to continue going lower. This was such a hard dive, and everybody's like, well, hey, this is probably going to go lower. And then maybe they read some articles that are put out, and you see what I'm saying? So all of this kind of builds a sentiment in the market, but that makes it more difficult for the market makers to move, because now everybody's basically betting that the market's going to go lower. So that creates, higher price point liquidity on these heat maps that says, well, now all the money is basically made when the markets move back up to $103,000. And when the market maker moves the price up to that point, it's liquidating all of these shorts that thought that the market was going to go down. So that's how the markets move and the price action moves. And so everybody in TA, we look at the market and we look at these charts and we look at these, Elliott wave or the Fibonacci or whatever, because these are systems by which they become their own self-fulfilling prophecy. If I'm looking at, different indicators or different patterns, well, if the bulk of a market believes that once this pattern has been confirmed, the price should do X, then that's what I'm trading on. That's what everyone else is trading on. And then it basically fulfills that prophecy because of this pattern or because of this indicator triggering or whatever. And if enough people are looking for the same things, they make that actually happen. Does that all make sense? So, while a lot of technical analysis is throwing bones on a plate and trying to make sense of it all, the reality is that when enough people believe in something, it becomes the truth. And it doesn't matter where it originated from or what caused it. It's a perception. Perception becomes reality in the eyes of the majority that believe it. Where else do we see that happening, right? So that's basically what's going on. So effectively, there's a lot of cool stuff happening, but I really believe that this is another dip. Now, could we go lower? We could potentially. Maybe Cardano sees 85 cents. We'll see. I originally thought it might go all the way down to here, 76 cents. This could all happen. This could all happen over the course of the next couple of weeks as we head into inauguration. I'm hoping it doesn't, but we have some strong support here around the 85 cent range in Cardano's price. If it goes down to 85 cents, I'm not selling thinking, oh my gosh, it might go down to 76 cents. I better sell and buy back in cheaper. No, I spent over 2 years accumulating and averaging my position and getting it to, in the 30 cent range. So I don't feel like I need to try and degen this and try to make a play, because generally, especially if you're a newcomer, you're better off averaging in, averaging out, in my opinion, than trying to ape in and ape out and then swing trade what you think could potentially happen in a world you don't know that much about. So, it's like a little kid sticking his finger in a light socket. You don't understand what the outcome is likely going to be because nobody's told you, but you're going to learn today. So that's basically what it boils down to. That's my video for the day. I just wanted to basically put a little bit out there just to get people, listen, this is going to play out one way or another. Maybe we go a little bit lower, but eventually I think the closer we get to inauguration, the more bullish this momentum is going to become. And I definitely think we're going to start seeing a lot of new higher highs and potentially all-time highs by the end of this month. So I'm just patiently waiting and hoping the sky doesn't fall until then. So until next time, crow your coins. Thanks for joining me. Make sure you check out all the links in the description below. And if you're not subscribed, maybe do that. I'm always right sometimes, but at least I can be semi-entertaining. If you want to listen to an old guy with a bunch of gray hair, well, maybe I'm your guy. So until next time, crow your coins, and I'll see you soon.